poor teaching moment is that first practice problem. I'll show you here. The one that I said, chapter 1 example, and you opened it and you saved it. And then I said, okay, let's do it tomorrow. We'll worry about it tomorrow. And I had it all, the formatting was all bad. I just said, forget that. Today, I redid it. And so now forget the one that you saved yesterday. The one we're going to use today is called Revise Chapter 1 Example. Use this one for your assignment. Okay. So we're going to click on that. It's going to pop up a problem that should look familiar from yesterday. Open that baby up. Here we go. I think my computer's a little slow because I'm recording this. Okay, so it should look like this. Revise Chapter 1 example. And I'm going to make sure that you guys can get on there when I start seeing your icons pop up here. Make sure you can see that. There we go. Okay. So you guys can see that one. Go File, Make a Copy like we always do. And this is the one we're going to fill out today. So I have 3 of them. Then if you looked on Canvas, you have 3 of these problems today. And so this is problem 1. Each one's worth 5 points. So put our name on this one. Okay. I'm letting it come, sorry. That's why I'm being quiet here. My computer's being really slow today. Okay, so what do we have here? What is this all about? Well, with chapter 1, here's how this begins. And the reason I like the textbook that we kind of base this class off is they really start you in simple terms of how to do accounting, like how do you actually use numbers and how to apply it to a real world business. So again, yesterday we talked vocab and all of these things, but now I really want to do a problem. And this is why it's so good to be here today, because you take a look at this chart and it could be overwhelming. You're like, I really don't understand what we're doing. But I think that today you're gonna walk away hopefully and say, oh yeah, these problems are really easy. Okay, so first off, let's look at the scenario here. Ben Furman opens his own business cleaning cars. We talked about this. He's a car cleaning, like let's just say he's a high school kid. He goes around and cleans cars, and he calls it Ben's Car Care. And he decided he needed to create 5 different accounts to keep track of his money and follow the rules of the accounting equation. So, for business purposes, for tax purposes, you need to keep track of where your money is. So one of the ways to do it is to create a chart like this. Now remember that the accounting equation is on the left side is assets. And these are all the good things that you have in your life. For you guys personally, remember it could be your phone, your backpack, your purse, your wallet, your cash, all of those things. For him, he's got 3 assets: cash, supplies, which would be like towels, hoses, whatever, and then prepaid insurance. And what that means is every business has to have insurance. So let's say he scratches a car or he gets the interior wet and it shorts something out. He's got to be able to pay for that through insurance. So those are his 3 assets that he wants to acquire. Then over here, the way he acquires those assets are he either borrows the money to get it from Butler Cleaning Supplies, that's like a store, and so liabilities is that, or owner's equity is called Ben Furman Capital, and what that means is this is the money he puts in himself. So to get these 3 good things, he either borrows the money or he puts the money in himself. And as long as these 2 things added up equal the total of these 3 things, then you're good. That's all that matters throughout this equation, is that it's always got to be what they call in balance. And as I look at this video here, if I lag or if I'm choppy or you can't hear me, please speak up So it does, so you don't get lost, because I'm just speaking to a screen here. I can't see if anything's bad on your end. So please feel free to speak out. Okay. So let's take a look at transaction number one. There's going to be 5 transactions in which we work through. So it's only 5 of these. It's fairly easy once you get it. Okay, first thing says, Ben's Car Care receives $10,000 in its account from its owner, Ben Furman, to start the business. So let me explain how this works. When you start your own business, what you want to do is you want to open up a separate bank account for your business. You don't want to run the business out of your own personal account. They call that being a separate entity. And here's why. If you get sued, you only want people to have access to your business's money, not your personal money. So like if I started a business, I would want to open a separate account and file that with the state and say, here's my business account. Someone comes after me, I say, all right, whatever I screwed up, here's the money that I owe you, or here's what in our lawsuit, here's the money. But if I use my personal account for all my payments, then they can come after my personal stuff, my stocks, my house, all those things. So you want to create a separate entity for your business. So usually the first transaction for any of these companies is that the owner takes money from his personal account and he transfers it over to a business account that he's created. So here's how this works. You say Ben's Car Care receives $10,000 in its account. All of these things up here are from the business's perspective, not from his personal perspective. This chart is for the business. So in this example, and I want you to put your mouse, your cursor, let's see if I can do this here. There we go. I want you to put your cursor right here underneath cash. This is really slow on mine. There we go. And I want you to put a plus $10,000. You don't need to put the dollar sign. I want you to put a plus 10,000 in cash for this transaction under the heading cash. Why am I doing that? The business is receiving $10,000 cash in this transaction. Now I know Ben himself is losing money, but the business itself is receiving $10,000 cash in this transaction. Okay, now here's the important part of this. This is why it's good to be here. If you give $10,000 to the left side of the equation, so this left side, this box here just went up 10,000. We're out of balance right now, right? If we added all this up, this would be 10,000, but this side over here is still 0. So this is not going to work. They would come to us and say, hey, your equation's out of balance. You're doing something wrong in your accounting. So every one of these transactions that we'll read in here in blue affects 2 different categories of the 5 up here. So when I say the 5, cash, supplies, insurance, Butler Cleaning Supplies, and Ben Furman Capital. So we affected cash. That was one of the 5. We need to find the other one that we're going to get affected here. Okay, and what this means when we say he received $10,000 in its account from its owner, Ben Furman, that means that this account over here, Ben Furman Capital, this keeps track of how much money the owner has put into the business so far. How much equity does he have in? Before this transaction, he had 0. After this transaction, he just put in $10,000. So to make the equation work and to do your accounting correctly, I want you to go to the Ben Furman Capital category, excuse me. My mouse is so slow here, but we'll get it over there. There we go. And underneath Ben Furman Capital, we're going to do the same thing. We're going to put plus 10,000 there. Again, why is that? Here's the habit that most people get into, and I totally get it. They think, well, wait a minute, no, Ben lost $10,000 personally, but this is not what that's keeping track of. It's keeping track of how much money has Ben contributed to the company. And basically what this is saying is if an accountant or like the government came in and said, hey, Ben, where did you get this $10,000 that you're showing that your company has? He can now prove, he says, well, I contributed that $10,000 myself on whatever day this might be, on October 16th. Okay, here's one other analogy I want to give you, and then we'll start going faster, so I won't over-explain it. I always call the left side like the brother and the right side the sister. And I think about like Halloween candy. And I always think, okay, if in one problem I give the brother 10,000 pieces of candy, the sister over here is going to be mad. And she's going to say, well, how come he got 10,000 pieces of candy and I didn't? And I'd be like, well, just relax. I'm going to get you 10,000 pieces of candy to balance it out. So just think like one side of the equation, this side over here, assets, is the brother. The other side over here is the sister. And they always have to be in balance or else you get a big fight on your hand. And I know this personally firsthand from our house. So as long as 10,000 equals 10,000, then you're good. So then what you do, you come down here to the new balances section and you say, okay, after that transaction, what are our new balances? So cash now has a balance of $10,000. We had 0, but we added 10,000. You go to supplies, and I'm going to start doing these on Google Sheets to make this so we don't have to use the mouse and the cursor and start making it a lot simpler to do this. Prepaid insurance is still 0. Come over here, Butler cleaning supplies, it's still 0. We haven't touched that one. And then Ben Furman Capital is now $10,000. So at the end of each transaction, you do your math and you say, okay, are we good? Are the equations in balance? And that's what accounting always asks. Are they in balance? And if they're in balance, you're good. And this is why you can check yourself, like if we ever have a test on this stuff, you just say, all right, well, I'll just make sure that after every transaction I'm in balance, and I'm probably going to be right at that point. Okay, so let's do the next one. All right, the next one says, as the owner of the business, Ben pays cash for supplies $1,577. So he's now created a bank account. Now he says, all right, I gotta start buying some supplies before I can go out and say, hey, I want to clean cars. So his next step is to go get some supplies, whatever it might be, water, buckets, okay, whatever. So remember now, you look at this transaction and we say, it's gonna affect 2 of these 5. It's always gonna affect 2 of them. Your job is to pick out which 2. Well, that literally says them right there. It's cash and supplies. So let's think about what's happening. Let's go over to cash. Okay? We know cash is going to be affected. You always ask yourself, is it a plus or a minus? All right, and here's what you say. He pays cash for supplies. So the business is paying cash for supplies. When you pay cash, that's a minus. You're losing cash. So it's minus 1577. Excuse me, I put my comma in the wrong spot. 1577, like that. He loses cash. So now you look and you say, all right, if we stopped right there, we're kind of hosed because the brother has lost 1,577 pieces of candy. The sister's taunting him, saying, ha, 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 you lost your candy. I have more. And he's now pouting. So how we got to solve that? We got to make this in balance. The other thing we're going to affect is supplies. So supplies, this is an interesting one, is right next to it. It's here. And so you ask yourself, okay, I know we affect supplies because we got more supplies. Is that a plus or a minus? Well, to keep the equation in balance and to think about it logically, it's a plus because you got more supplies. So it goes like this, 1,577. All right. Now, we affected 2 accounts on the same side of the equation. Both affected the brother here, but it's okay. What we told the brother is, hey, listen, yeah, I took 1577 away from you here, but I gave you 1577 right back. You're all good, like net neutral, you're fine. What we call this is exchanging one asset for another. It's like if you guys went shopping today after class and you went and bought a candy bar or a box of cereal, whatever, you're exchanging one asset, cash, for another asset, cereal. It's simple. I mean, that happens all the time. And that's it. Once you affect 2 boxes, you're done. Stop doing it. All right, and then come down to new balances. And you say, all right, this one, and let me make sure I got my math since I messed up yesterday. This one is 8423. Right? That's how much cash we have now. Supplies is still 15.7. Well, now not still. It's 1577 now. Okay. Prepaid insurance still 0. We haven't touched that one yet. We haven't touched Butler cleaning supplies. So that's still 0. Mine's not lining up perfectly, but you get the gist. Okay, and then over here, Ben Furman Capital is still 10,000. Now, the reason I love accounting, and again, slow to figure this out in my life, is that after every transaction, you can check your work. so different than writing an essay. It's like, okay, am I right? Does 8423 plus 1577 plus 0 equal 0 plus 10,000? And if the answer is yes, they are equal, then you move on to the next problem. Okay, so we got 2 of the 5 done. Let's go to number 3. And hopefully this one seems simple to you. All right, Ben went and bought supplies, but then he knows that before he starts doing anything in terms of cleaning cars, he needs insurance. So, as I said, if somebody brings their car to him and he breaks a window, if he wrecks the interior, if he scratches the leather, then I don't think they'll sue him, but he wants to have insurance in case something goes bad. Okay, so we figure out in this transaction which 2 of the 5 get affected. That's how the steps work. It says he pays cash for insurance. Okay, so the first thing I know he does is he pays cash. Okay, so we're going to spend a little more money here. And when you spend cash, you always ask, is a minus or a plus? When you pay cash, of course, that's a minus. Just think about your own life. You're losing $1,200 here. Okay, so that's simple. Minus cash. All right. Well, where's the other one? Where do we balance that out with? We say, okay, for insurance, and we have a box for insurance here. We have a row or a column for insurance, and we go and we say, are we getting more or less insurance in this transaction? That's how you determine the plus or the minus. And I say in this transaction, we're getting more, right? We're buying some. So insurance goes plus 1,200. So it's the same as last problem, except instead of exchanging cash for insurance, we're exchanging cash for supplies. Excuse me, opposite way. We're exchanging cash for insurance here instead of supplies. Now, once you affect 2 boxes, you can't affect any more. You're done, and you just do your math and you move on. Okay, so we do our math. We come down here to new balances, and we say, okay, 84. It was 84.23, but we lost more cash here. It starts to worry me a little bit because we're starting to spend a little bit of cash, but that's okay. And I have it here. I've already done it, cheating here. 7,223 is how much we have in cash right now. We started with 10 grand. We're slowly dwindling. Supplies, since we didn't affect it, is the same number. It's 1577. Now we have insurance, which is good. It's like you guys have to have car insurance when you drive. It's expensive, but you have to have it. Same idea here. And then over here, we haven't touched this one in a while. We got Butler Cleaning Supplies at a 0. And then owner's equity, we got at 10,000 still. Yeah. And if you're understanding this so far, you're in good shape. Part of the reason I'm going to end early, a little bit early today too, is to allow people to ask questions, because it's just hard. It's really hard to do this over Zoom because you can't raise your hand and ask questions, and I can't see you right now. So this would be a good advantage, or take advantage of talking to me personally later. Okay, the last 2 get a little more difficult, but it's not overly. Don't be scared. Okay, transaction 4. This is the one that people struggle with, but I think you're going to be fine. As the owner of the business, Ben buys supplies on account. Now that's a new term. So on account means you go into a business and you buy them, but you don't give them cash. You have an account with them and you say, listen, we'll settle up at the end of the month, but I come in here so frequently, you know me, we have a signed contract. I'm going to come in, I'm going to show you my card, I'm going to take my supplies out of here, but we'll pay you later. You know, where I always see this. If you ever go to Home Depot and just sit there and watch the cash register, which is kind of creepy, but if you ever do that, there's a whole bunch of contractors that go in and do exactly this. Like they'll go in and get 8 2x4s or whatever, a bunch of lumber, and they'll walk out. And I mean, they don't just walk out of the store. They take it up, they show their card, and they say, hey, we got an account with you. We'll settle up at the end of the month. That way, like, you know, if it's a big construction company, the employees can just run to Home Depot real quick and get what they need without having to use their own cash. They use the company's card, and then the company will settle with them at the end. So that's what's happening here. So you're not spending cash. You are buying something, but it's on account. So how does this look? It says, as the owner of the business, Ben buys supplies on account from Butler Cleaning Supplies. This means he did not pay cash. He bought the supplies, but will pay Butler Cleaning Supplies later, $2,720. All right, so the hard part is what 2 accounts get affected here. You have these 5 up here. Here's how I solve this. In the written problem here, in the transaction, it always tells you what 2 accounts get affected. Like the words are there. And in this case, it's supplies and it's Butler Cleaning Supplies are the two that we're going to affect. That's what it says right here. It says do not touch cash even though we're buying something. All right. So you go over here to supplies, which is this under the 1577. Let's scroll over there. And you ask yourself, did he get more or less supplies in this transaction? He is buying them, right? So he is buying supplies and he's getting $2,720 worth of supplies. So supplies are going up in this case. Okay, I don't think that part's difficult. The next part, though, is, okay, we want to affect Butler Cleaning Supplies, this one that's had zeros the whole time. It's the only one we haven't affected yet. And you go over here, and this is where it gets hard, but I think you're going to be fine. This is where you have to think like an accountant. There's two ways to solve whether this is a plus or a minus. The first way is to think, you think of it, how much does he owe Butler Cleaning Supplies? And to this point, it's been zero. But now after this transaction, he now owes them $2,720 more than he did. So the hard part is you want to think negative. You're thinking negative because, oh, he owes them money. It must be minus. What this row keeps track of is how much money does he owe the company? And it was zero, but now he owes $2,720 more. But let me give you a better way to do this. If you gave the brother $2,720 or 2,720 pieces of candy, the sister is over here fuming. She's like, wait a minute, where's my candy? And you're like, relax. Here is your candy. It's plus 2,720. You get some too, and you're even. No fighting. Stop fighting. It sounds familiar. I mean, speaking from my heart here. So it's plus 2,720. Again, let me reiterate that though. Why is it a plus in the liabilities? Because you're keeping track of how much money you owe them. That's so key in a business. You have to know how much debt you have. So like, I'll tell you, when we spend stuff on our credit card, I immediately go look and I say, how much is our credit card bill right now? How much debt do we have to our Visa? I check it out all the time, and it grows every time we buy something. So that's how you want to think of this column. It's an accumulating debt. All right, and that's it. Once you affect those two, you're done. And now we do our new totals. And then we only have one left. All right, and so this column here, 7,223 in cash. We didn't touch it. I do a little math here, but I've cheated. I've got it at 4,297. We got a lot of supplies. Great. Okay, and then we have now $1,200 in insurance. That didn't change. Okay, now we've taken on some debt. And we owe Butler Cleaning Supplies some money. So we owe them $2,720. Okay, and then we have put in $10,000 of our own money. That hasn't changed since the first transaction. Okay, and again, what I'm telling you is on a test, you just, after every transaction, just add these three and add these two. And if they are equal, then you're fine. You just keep going on. You're confident. You're like, yeah, I'm doing it right. So different than like writing an English essay. You can check your work after, you can like self-check after every problem. All right, and then we have one last one, and then that's it. It says 2 weeks later. So let's say it's the end of the month, and Butler Cleaning Supplies and Ben have a deal. They're like, okay, you need to pay off some of the debt that you owe us. We don't like that you owe us $2,720. You need to pay it off. And in this case, their deal is that, hey, you need to pay off at least half your debt. Okay, so Ben says, all right, I'll pay off half my debt to you, just so we remain on good terms. So in this case, it says Ben now has to pay off his debt. He pays cash. Okay, so we know cash is going to get affected on account to the company. So we have cash in there, that word cash, and we have Butler Cleaning Supplies. So we know it's going to be cash, and we know it's going to be Butler Cleaning Supplies as our two. And as I told you, the two are always written in the problem. So it's like a little treasure hunt. You just go and find those two words. All right, so what we do with cash is we say, are we paying cash in this transaction or are we getting it? And it literally says he pays cash. So we're losing more money here. And we're losing a minus 1,360. So we're paying cash in that problem. Okay. Then you go over to Butler Cleaning Supplies. And again, the hard part here is, well, is this a plus or a minus? The two ways to do it. The first way is kind of the correct accounting way, concept-wise, is to say we're reducing the debt. Because we gave them cash, we now owe them less money, so we're going to subtract. Or the other, and this is probably the easier way to do it, is you say, if we took 1,360 pieces of candy away from the brother, he's going to complain unless he sees the sister have the same thing where she gets the money taken away or the candy taken away. So minus 1,360. You got to do the same thing to both sides of the equation. Notice if you affect two accounts on the same side of the equation, so both assets, one has to be a minus, one has to be a plus. But if they're on opposite sides, then they have the same sign. You'll get that pattern eventually. Might be a little confusing to think of it that way right now. Okay, so at the end, this is where it says final balances. And this would be like when you report your earnings. This is a real simple example, but you go out and you say, all right, here we are. Like you open your books and you say, here's what we have. And then people will decide if you were a stock, do we invest? First thing they'll look at, how much cash do you have? At the end of this problem, we have $5,863 in cash. And so an investor can say, they can decide if that's good or bad for them. Who knows right now. Okay, then they say, well, how much supplies do you have? And we say, well, we have $4,297 worth of supplies. And again, some investors might make their decision on whether to buy your stock based on that. And then they say, do you have insurance? And you say, yeah, we got $1,200 worth of insurance. We're okay there. We're covering our backside in case something happens. Then they'll ask you, well, do you have any liability? Do you have any debt? And then you don't want much debt if you're a stock or a company. Nobody wants debt. We don't want debt. Nobody wants debt. Minus one, or excuse me, not minus, 1,360 is that answer. We paid off exactly half our debt. So when I did that calculation, came up with exactly half. And then over here, they want to know, okay, how much money did you put into this initially? I say, I put in 10,000. Yeah. Okay. And so now your problem is done. And now you are like, when I say you're getting the hang of this stuff, you literally could report earnings right now for Ben's car care. You have just done the books for him. This is like bookkeeping. And at the end, you check your math, and I'll just cheat and I'll tell you it's right. But you add the three assets right here, boom, boom, and boom, and you say, okay, how much does that add up to? And it should be 1,360. Okay, excuse me, 11,360. There's my math again. And then over here, this adds up to 11,360. So you answer this question down here. You say, do assets equals liabilities plus owner's equity? And I'm just going to give a big yes. I'll put a couple exclamation points in there, maybe one or two, so it stays there. I'll just put one. Yes, they do. And then that's when you would turn this problem in and say, hey, Mr. Buell, I know I did my books right because everything's equal. So I hope that, it's a lot to throw at you there, but that's how simple it is that every transaction, you just find the two columns to affect. And the hardest part is it a plus or a minus? That's going to take a little bit of practice, but I think you're going to be fine on that after we do one more. My goal here today, we're going to try one more problem like this. I made another one where now that we've kind of walked you through and held your hand, we'll try to do a little bit of more of a hybrid, meaning I'll help you some, but then you'll do a little bit on your own. Okay? All right, before we move on to that second one, though, I want you to submit this one. So go ahead and go back to Canvas and submit this problem so you get credit for doing this one right here. And I'll change my heading here while you're doing that. Put solution. There you go. Okay, and I'm going to stop sharing my screen for a moment. Okay. And I'm going to come over here. And here's what I'm going to beg you guys to do is somebody who's brave enough in the chat room, or you can say it out loud. I'm just going to say, how are we doing? Because I have no feedback here, which it's fine. What I'm saying is, are we doing all right? Is it clear so far? Good. Okay, good. Thank you, guys. Thank you. Okay, let's do this. Let's go to Canvas. Thank you for all of you who are responding there. Let's go one more today and call it good on a Friday. Okay, and see if you're gonna be able to do this. If you can get this, you're already ahead of me from where I was in college. I know I keep saying that, but man, it's just like you get the base, you understand the base of this, you're gonna be just fine. Okay. So we're gonna go and we're gonna do the 1-2 work together one, and then, like I said, we'll call it good. If you feel like, hey, I know what I'm doing, you can kind of move at your own pace. Okay, and I'm gonna take that 1-2 on your own, and I'm gonna unpublish that. My computer's so slow here. I'm trying to record this lesson. Come on, baby. In the interim here, I got on Amazon Prime and bought a 12-foot jack-o'-lantern for our yard during Amazon Prime days. So I'm taking my marketing class out to my yard today. I'll take you guys out next week and show you the 12-foot jack-o'-lantern. Maybe not the best purchase, but I was excited. I'm excited about Halloween. All right, so let's do 1-2 work together here. Okay, and I worded this a little bit differently just so you could get in the habit of kind of interpreting what's happening. But before we start and before I get rolling, I'll give you enough time here to make your copy. I've got to do the same. So you can type on it. Another thing I like about this, I mean, we could go probably a lot faster if we were in the classroom. No big deal. Who cares? But I'm just saying, it's so much easier to have, instead of having to move your mouse all over the place, to just handwrite it. But who cares? You're getting it. What I was saying earlier, now you see the benefit of this, is to do it on Google Sheets rather than on like a Word document, because you could just click over to the column. But that's okay. We'll make this work. Okay. I tried to make this as similar as possible to the previous one that we did, because I want you to, really get in the habit, build confidence. Because if you get this in this is what I'm saying, each chapter builds upon itself. If you got this right now and you think this is easy, that is fantastic. You are so ahead of everybody else that's taking business classes or taking accounting in college. You're getting experience right now. I know I keep saying that, but I just want you to start building some confidence. You're doing a good job. Okay, so in this one, I said Stephen Taylor starts a housekeeping business called Taylor Cleaning. I mean, I'm just making stuff up here. And then the 5 accounts are pretty much the same: cash, supplies, prepaid, insurance. There's a store called Household Supplies that he's going to have an account with and buy from them without paying them cash. And then his name's Stephen Taylor Capital. Okay, so remember that usually the first transaction is always the owner putting money into the business. So he goes into the bank and literally transfers his money from his personal account to a business account. So it's still him, but it's under his business. So if he gets sued, that's all that he owes. Okay. Remember that the tough one about this is you think, wait a minute, is he paying cash or is he eating cash? It's always from the business's perspective. This chart is from the business's perspective. So usually in the first transaction, the business is receiving cash. I know Stephen himself is losing cash, but that's a whole separate chart, one we're not going to touch. So in the first transaction, it's plus 4,000 in cash because the business is receiving 4,000. And then you ask yourself, what is the other column out of the 5 here? and it says his name, Stephen Taylor. And so what this means in this transaction is that Stephen Taylor is contributing $4,000 into the company. Okay, so when people say, hey, where did that $4,000 come from? Stephen can, go and show a receipt or whatever. I forgot to put a plus there. He can go and say plus 4,000 right there. It looks like my font's a little bigger, but that really doesn't matter. Okay, so plus 4,000 there. And once you affect 2, you got to stop. Like a lot of people start wanting to write in all these different columns. Don't. It's once you affect 2 and it's in balance, you're good. And I gave 4,000 pieces of candy to the brother. So now I gave 4,000 to the sister. We're all happy. And you come down here and you say, all right, $4,000 in cash is what we have. For supplies, 0. For insurance, 0. Household supplies, 0. And then capital, 4,000. This is the part that takes so much time, is just moving your mouse around. Okay, 4,000 here. Hopefully yours is much faster than mine. Okay, go to the second one. And again, just check 4,000 equals 4,000 when you add. Shouldn't be a problem there. Okay, pays $500 for supplies. Now, what I try to do here, I left out the word cash on purpose because they don't always write it. They think, okay, you guys understand it now. But that's cash. If you see them paying money, it's cash. So I know in this case, it's cash and supplies. All right? So I go to cash and I say, all right, I know it's cash, but is it a plus or a minus? And I just say, am I paying it or am I getting it? And I'm paying it, so it's minus 500. Okay? And then I know it's supplies. Now, you ask yourself, you can do the brother-sister rule, or you can just say, are you getting more supplies here or are you losing supplies? And in this case, you're buying them, so you're getting more. But also remember that the sister and the brother are mad right now because things aren't in balance. But then when you do this, plus 500, the sister looks over and says, wait a minute, he's getting 500. But then she looks further over and she's like, oh, he lost 500 too. It's a wash. And that's how accounting works. As long as you keep it in balance, you're fine. So then we say, all right, we go down to new balances and we say 3,500 for cash. We say 500, 500 here for supplies. Zero. Insurance. 0. Household supplies. And capital, 4,000. Okay. All right. So again, what they'll say is, where did you get $3,500 in cash and 500 supplies? Where'd you get the money for that $4,000 worth of stuff? And you say, I put the money in myself. And then the government's happy. Like, nobody's getting sued. Nobody's going to jail. We're good. Okay. 3. Taylor Cleaning buys $1,000 worth of supplies on account from household supplies. And I even put the hint here because this is the one everybody messes up. They did not pay cash. It doesn't say cash. It says on account. So the 2 that are going to get affected here are supplies and household supplies, and it's $1,000. So we go to supplies first, and you ask yourself, are you getting more or are you getting less supplies? And we bought some. So like it's going to household supplies, like going to Home Depot, and you walk out with $1,000 worth of stuff. You didn't have to pay cash. It's a nice contract that we have with household supplies. But now here's the tough one again. Is this a plus or a minus? You can do the brother-sister rule. If you gave 1,000 pieces of candy to the brother, the sister demands 1,000 pieces of candy, or else the equation's out of balance. Or you say, we owe them 0. Now after this transaction, our debt grew. So now we owe them 1,000. That's why it's a plus. That's the hardest thing to wrap your mind around, but I think you're getting it, I hope. Okay, so then we do our new balances. And we say 3,500. We say 1,500. say 0. We say 1,000. Okay, and we say 4,000. And then you do your math, and it looks like 5,000 equals 5,000. The only drawback to that transaction is now we took on some debt, which is okay. It's what people do. Like, again, going to college, you guys probably have to take on some debt. It's just the way of life. You can't buy a house without debt. You can't buy a car without debt. It just happens. Okay. One thing I would worry about right now is we don't have any insurance. So if we screw up something when we're cleaning somebody's house, we scratch their TV or whatever, we need insurance. So we're going to pay $300 for that. Again, it doesn't say cash, but you assume if it just says pays 300, you assume it's cash. So we lost 300 in cash in this transaction, minus 300 for insurance. And then it literally says for insurance, which is the third column over. And you got to use either the brother, whatever's easiest for you. Use the brother-sister rule, or say, if we took minus 300 there, we better add it to keep it in balance. And it's plus 300. Just think we bought $300 worth of insurance. And once you get 2, stop. It is okay to affect 2 on one side of the equation, and then you're done. I saw somebody chat questioned that. Good question. You don't have to affect both sides, but you do have to affect 2 different columns, no matter where they are. So now we're down to 3,200. Be checking my math so I don't screw this up. We're at 1,500 here. Now we have a little bit of insurance. Insurance is no fun. I'll talk about my life insurance later, but insurance is, you buy it and you hope you never have to use it. It's an interesting business. It's like you're paying for something you hope you never use. Isn't that crazy? So, like if you buy life insurance, you obviously hope you don't die, but you're paying all this money in case you do. Or if you buy car insurance, you hope you never get in an accident. What if you do? It's crazy, but you hope you don't. So you're paying money to hope you never use it. Wow. All right, last one. Transaction 5. Household supplies. This time, we have made an agreement that at the end of the month, we will pay off everything we have so we can go into the next month with no debt. So the last transaction says we're paying off the 1,000 we owe to household supplies. So we're paying that debt off, that 1,000. Again, it doesn't say cash, but when you see paying, and it doesn't say, on account like we had before, you go minus 1,000 in cash. Okay, and then you come over here to Butler Cleaning Supplies, or Household Supplies, excuse me. And this is where you get messed up, but I think you're starting to get it. Is that a plus or a minus? Remember, there's 2 ways to figure that out. One is, well, we're reducing the debt that we owe them, or the other way is, if we took 1,000 pieces of candy away from the brother, we take 1,000 pieces away from the sister to keep it even, or else we got Armageddon in our house. Again, it's such a personal story there. But all right, and then we're done. So then you say, okay, we're ready to report our earnings. And here's our books at the end of the month. So at the end, we got $2,200 in cash. And people would worry and say, well, you started with 4,000. How come you only have 2,200? And well, I would say to them, well, because we had to acquire $1,500 worth of supplies, and I had to go get some insurance at 300. So yeah, I know that we don't have as much cash, but that's okay. We exchange that for other assets. 300. So it looks like we're at, let's see, 22 and 15 is 37.3. We're at 4,000. And then over here, look at how this magically works out. This is why I love accounting. I know that sounds corny, but it always works out if you do your math right, which I didn't do yesterday. But if you do your math right, it always works out. And so you, at the end of this problem on a test, and you're like, okay, let me do my math. Please, please, please be equal. 2,200 plus 1,500 is 3,700 plus 300 is 4,000 on that side in assets. And over here, we don't owe anybody anything, but we have 4,000 that we put in. So really what you say, this would be a good company for me to invest in. I'd say, look at all their good assets and they have no debt. So they put in the money themselves. They were able to afford this themselves without having to go into debt. Say, I like this company. All right. And so then you say, do assets equal liabilities plus owner's equity? And I'm going to put a big yes. Takes me down to the next line, but who cares? And we say yes, and we're good. Now, that is it. I'm going to stop sharing for a moment here. That is, if you can get that from the last 2 days, if you can get the concept of why we have to have it equal, and then you can get how to do those problems, you're good. what I always say about this stuff is imagine if you weren't here today. Like imagine you missed the Zoom, which is why I'm recording this. But imagine you missed this and I said, okay, here's the problem, do it. And you hadn't had any of this, which is how I felt in college. I'd be like, what? Like, what is going on? But once you hear how easy that is and you just say, oh, I'll just put it in two different columns and I'll keep it in balance and we're all good, it's not that hard. So everybody says, oh, accounting's so hard, accounting's so hard. It's not that hard. It's always in balance. You take it step by step, you go slow, you're going to be just fine. So you saw hopefully earlier on the modules that I had a third problem ready to go. At this point right now, after doing those two, I think you've got what you need today. And so what I'd like to do on Monday is take that third one, and after 2 days off, we'll come back and we'll start Monday with a review and say, okay, remember how to do these? And then we'll move on to our next step after that. But I think right now, I think you're in good shape to head into the weekend. And so the only thing I want you to do over the weekend here, and you can check it out for the 25 minutes you have before second period, check your stocks, make sure you're doing whatever trades you want, and we'll start talking earnings later, okay? If you don't forget to submit that one. If you feel good about everything and you were able to submit everything, great. Sarah, you're asking, I'll get you in a second. Have a great weekend. Get outside, and then we'll get after it again on Monday. Have a good weekend.
Have a good weekend as well, Mr. Beal.
Thanks, Jose. Appreciate it.